Time to get in a fundamental view on the equity markets. Hemang Jani, Senior Vice President Sharekhan, now joins in on the show. Hemang, thanks very much for being with us. To start off with, given that the FII flows for the equity markets have been fairly intact, the kind of correction that we see now, do you believe that it's just a mild aberration and it's not going to be very weak, and would you continue to hold on to long positions?
I think so. We've seen the markets running up over the past about 5 to 6 trading sessions, and we've entered this consolidation zone. And overall, if you look at the global markets, things are okay. We've seen some marginal weakness, but no cracks as such. Overall sentiment, because of the fact that overall year has been very good in terms of the returns, has definitely improved. And we think that the government is also doing its bit in terms of, reforms, and particularly on the oil and gas sector and banking. We think that some more announcements could follow through. So any, dip that we are seeing right now is overall an opportunity to enter some of the promising sectors.
Right, but Hemang, at the start of the year, a lot of people were coming out and saying that this is 2013 is the year when people should be going out and taking risk. This is the year when you'll see people move away from the defensive pack. But on the contrary, you just mentioned that this could be a phase of consolidation that we're going through. Would you say that it's a little more than that, because we are seeing rather beginning to see a return to defensives?
I think that if you see the performance, the rate sensitive as a sector has done extremely well. Banking, real estate, auto. So we think that, yes, to a great extent, people are moving away from the defensive sectors like FMCG or to some extent pharma and others, IT, to some of these rate sensitives. And that as a trend we think will continue, given the fact that the risk appetite has come back into the system.
And what is your view on the overall banking sector in anticipation of the kind of move that the RBI is likely to take at the end of this month?
The overall as a sector, it has been doing extremely well. We think that once we have a little more clarity on the earnings for this quarter, because remember that PSU bank as a space, some of the banks still are grappling with the sticky loans, and depending upon how that picture emerges, the broader call could be taken. But overall, I think both private sector banks as well as the PSU banks as a space should do very well.
Right, but on the point you made about earnings, how do you expect Q3 earnings for the banking sector will pan out?
Overall, we think that the private sector banks, we are looking at about 25 to 30% kind of a growth. Some of the banks could report, sticky loans like this Kingfisher, Deccan Chronicle. So depending upon what kind of exposure some of these banks have, there could be some volatility. But overall, because the wholesale rates also have come down by about 10 to 15 basis points, we think that the margins should improve. For PSU banks, it would be a case-to-case scenario. But overall, Union Bank and State Bank of India, we are looking at about 22 to 25% kind of an earnings growth.
And how would you position yourself on the infrastructure basket, given that most of the analyst community believes that there is likely to be quite a bit of negative news flow, particularly on the earnings, which will be reflected now?
Yes, infrastructure as a space is looking a bit tricky, particularly companies like L&T. We have seen that there have been cancellations of the order, and we are not seeing any great, announcements on the order front for even some of the sectors which have been laggards like power sector. So yes, in terms of the risk appetite coming back and the fact that the investment cycle could actually improve, some of these sectors could do well eventually, but at least from a short-term earnings point of view, we think that there could be some disappointment.
And do you see more steam in the overall oil and gas basket?
Yeah, we think that the way things have, panned out in terms of the government taking the initiative of making some announcements on the reform fronts, particularly on the production in the oil and gas space, we think that companies like Kane Energy, ONGC, and to some extent Reliance would benefit. However, we think that the diesel price hike, which has been talked about, if we have some kind of a decision being taken, it could actually re-rate the entire oil marketing company space.
Hemang, everyone is going into the earnings season also with an expectation that this time around it's going to be once again a dull quarter from Infosys. Would you share that view, and how would you position yourself on the stock for the long term at these levels?
I think most of the people are working with low expectations, and we also believe that organically the dollar revenue guidance is going to be muted. But the fact that they did one acquisition and 2 months of numbers of that company would be incorporated, the overall guidance could be upgraded to about 5.5%. Also the fact that there is going to be a reset of USD INR to about 54.5 against 53 would help the EPS guidance which they have given. So we think that given the low expectations, there could be some positive surprise, but no structural big positive upside.
Are you spotting any outperformers from the auto basket? Because Maruti Suzuki, despite the negative management commentary, has seen an upgrade recently. The counter seems to be holding up very smartly. Would that feature on your buy radar, and any other names?
Yes, we think that Maruti has a lot of positives going for it, apart from the fact that the overall numbers of the next 2-3 months are going to be good because of the interest rates coming down. Also the fact that the yen has corrected by about 8 to 10% is working to their advantage. And also we think that some of the new product launches in the SUV category, we think that would do well. So overall things are going in for Maruti. In case of Mahindra and Tata Motors, we think that some of the positives have already been priced in, so they might consolidate. But as a theme, we think that the auto sector would do very well.
And how about the power sector, Hemang?
Power, I think we need some more clarity on the reforms front, particularly the pricing as far as the SEB sector goes. And if we have some positives, and if actually the state governments bite the bullet and do some kind of a price hike, then definitely that sector should do well.
What's your view on the overall metals basket? Because while there has been a mild amount of recovery recently, there has been good news also with respect to the 20% import duty which has been imposed on stainless HR imports from China. Do you think that overall the fundamentals continue to remain weak and you wouldn't put any money into this sector?
I think post the China data which has come out, and the fact that the prices of some of the commodities, particularly iron ore and to some extent even copper, aluminium, are reflecting that the pricing environment is improving, which is definitely a positive for the metal as a pack. And the fact that in the domestic market we have some more steps being taken on the import duty front are also helping. So we think that yes, it provides a tactical trading opportunity, but it is not advisable to take a long-term structural call for the metal sector as a whole at this point of time.
Hemang, is pretty divergent in terms of the foreign brokerages and their view on the Indian economy. Yesterday, you did have a pretty positive view coming in, and today you've got Fitch, which is saying that India may face a downgrade in the next 12 to 24 months. How much importance do you think one should give to all of these reports that keep coming in?
See, the fact of the matter is that we have already bottomed out in terms of the economy as well as in terms of earnings. The domestic local investors are underinvested, which is reflected in the way the domestic institutional flow is coming out. We have seen that for the last about 6 months there have been sellers, and even the retail participation, if you look at it, is quite on a lower side. So the fact that the economy is going to be reviving now, one can debate about the extent of the growth, but overall the fact that we are turning positive would definitely be positive, and we think that compared to most of the other asset classes, equity is very well placed. So we are thinking that given the low expectations people have, we continue to be overall positive on the markets.
Right, and Hemang, lastly, if you could identify your top investment picks?
We think that the banking as a sector is extremely well poised because the valuation is their side, the government is doing its bit, and if we see some more positive on the NPL front, then obviously people should be more positive there. So banking would be one sector that we like. Maruti and Kane Energy are the two other stocks that we think would benefit from the current environment which is prevailing. And in case of mid-cap, we prefer the IT companies like CMC and Persistent Systems.